joining this. And it's going to be a hybrid mode. And please make your microphones on mute when you're not speaking. And when you have questions, you can raise your hand or you can add to the chat box. So this webinar is going to be designed for 1 hour, but we want to have more time for discussion, questions, and answers. So the presentation may be about 30, 40 minutes. And this scoping study, SAER conducted in last year to identify areas and ways that ADB can support the government of India and its relevant agencies, such as NABARD. We have some representatives from NABARD presenting today. In facilitating innovative financing mechanism and platform that enables voluntary carbon credit to benefit India's smallholder farmers. And this webinar is mainly targeted for internal ADB staff to informally discuss ideas and learn about the voluntary carbon market, but we extended our invitation to other external guests, and they are very much welcome. So let us start by asking Mio Oka, Director of our SAER division, by giving the opening remarks. Thank you, Mio. Floor is yours.
Hey, thank you. And let me just turn this. Okay. Thank you very much. My name is Mio Oka. I'm a Director of Agriculture Sector for the South Asia region. So dear participants and senior officials, on behalf of ADB, I'd like to extend a warm welcome to you all to this webinar on presenting the findings from our scoping study to leverage carbon markets for Indian smallholders. As Masa explained, we originally intended this as an internal discussion in ADB, but it is my true pleasure to note that we have a strong participation from India, from the ministry, as well as NABARD, the National Bank for Agriculture and Rural Development. ADB commissioned this study to understand the trend of voluntary carbon markets because we believe this has a large potential to extend benefit to vulnerable smallholding farmers. We learned that VCMs are rapidly growing and also that large core benefits can be yielded beyond carbon. Today, we hear findings and would like to hear also from you. But of course, we do not just wish to end this work at discussion level. Last week, I had the honor to meet with Secretary, Department of Agriculture and Farmers Welfare in India. And we informed our readiness to support NABARD's policy and capacity enhancement to incorporate BCM benefit to potential projects and their beneficiaries. The Secretary quickly elevated the idea and requested ADB to work with the team for conceptualization of VCM framework. As said, the market is rapidly moving. The number of poor people is not reducing as rapidly as expected due to external shocks such as COVID and floods and droughts. We need to act now, and ADB is seriously committed. Therefore, I hope you find this webinar informative. But at the same time, I urge all the participants to share your valuable observations so that we can quickly come up with a series of implementable actions. And we start working on this on the ground level already within 2023. That's what I would like to say at the beginning. But thank you very much for your participation. Thank you.
Thank you, Mio. So let's directly go into the presentation. And we allocated 30 minutes for presentations. And let me introduce the presenters. Two main presenters. One international firm, XAPA, Managing Director, Mr. Rafael Hara, He has 20 plus years of experience in sustainable investment and impact finance, especially in complex investment scheme design and implementation. And the second main speaker is Mr. Santosh Singh. He is the managing director for IntelCab Advisory Services. He has 18 plus years of experience in designing and implementing carbon projects and developing climate finance strategies across Asia and Africa. And I understand the presentation is going to be done jointly by two speakers and their team members. So the floor is yours, Rafael and Santosh. Please make the presentation in 30 minutes. Thank you.
Thank you, Masa. Very happy to be here with you all. I will present XAPA in a few seconds, but please, Santosh.
Very pleased to be here, and we look forward for the discussion. I think we have lots to talk about from the study, so I will just go into the presentation and XAPA, over to you.
Sure. So the agenda of this 30-minute presentation that we will share with Santosh is, first, we will just introduce ourselves very briefly, reminding the framing of the engagement. Santosh will then give us a view on the state of play of voluntary carbon markets, called VCMs. We have also worked on a few challenges to tackle that we have identified in our studies, and we will present as XAPA the recommendations that we have found to be able to leverage these VCMs for the benefit of India's smallholders, with a few words of conclusion, and of course the most important, time to discuss for Q&A. So I will briefly introduce our organization, and I will let Santosh do the same before we get into more detail. So we are a mission-driven company. We basically work on two streams. The first one is consulting for large organizations such as industrial corporates, banks, institution developments, public authorities, or large investors. We work only on sustainability-related matters, business and human rights, sustainable finance, impact investment, and responsible sourcing mainly. We have an advocacy activity which is quite broad, and I engage you to consult our website xapa.org, in which we share lots of webinars, briefing papers on all these topics. And the second thing we do is that we have developed a solution called SUTI, which is really meant to help transform the first mile of agricultural supply chains, which is the reason why we entered into relations with ADB and Miyoka and Masa here initially, which is mainly based on technical assistance, low-tech digital solutions, and innovative impacting finance, with our own in-house digital solution that we have developed, and which is really meant for vulnerable population. It can be used with feature phones, it can be used offline, it can be used by illiterate persons as well. And just to give you an example of what we do, we just launched a project, and I will be traveling to Sri Lanka next week to launch a project concluded with the Minister of Plantation, with the support of the French government, and Michelin Group on 6,000 natural rubber farmers, which will benefit from this program. In a few words, that's what we do. Please, Santosh.
Thanks, Rafael. So IntelliCap is part of Aviskar Group, and I'm very pleased to see colleagues from NABARD here. We have been working with a number of partners, including the Ministry and NABARD, for last 2 decades. Aviskar Group is an impact-focused group. We deploy capital in the form of equity, debt, and microfinance across the global south. IntelliCap is the advisory arm of that, and we have been working on multiple sectors, including agriculture, energy, climate change, etc. Relevant for this particular conversation, IntelliCap has been working on the shaping of the carbon market, working with the key stakeholders such as the Ministry of Environment, Forest and Climate Change and the private sector players, primarily guiding them on how to navigate through the process, as well as we have a fund that is coming up that would invest into carbon projects, primarily coming from natural solutions, as well as a platform that is mobilizing 1 million farmers to undertake carbon activities in India. So very happy to be part of this thing. So looking forward to our conversation. Over to you.
Thank you. Just to remind the engagement, so we worked on the target was really to find ways to help Indian smallholders and finding solutions to use voluntary carbon markets as a lever to foster rural development in India. And of course, lots of things have been going on in the voluntary carbon markets, and Santosh will present a broad overview on how it works and their dynamics. But of course, it's quite challenging to organize carbon programs which are inclusive of smallholders. So we have divided our work with IntelliCap in two streams. They have prepared an analysis of the voluntary carbon markets, and we have prepared some recommendations. In fact, our partnership went so well that we finally worked together on both sides, and the result is really a common work. We had some initial criteria that ADB and MASA asked us to respect. So first, the target is to foster a fair and equitable climate transition. The second one is that solutions must be farmer-centric, but also farmer-centric because we need to really focus on their needs to be able to embark such a high number of smallholders in change of practices that are related to carbon markets. But also the idea is really to design solutions that are versatile and can be used not only for carbon, but also for other externalities, biodiversity, community benefits, water credits, etc. And also that could be reused for regulatory topics, considering that probably in the next 15 years, lots of things will continue to go on these carbon markets, whereas voluntary or regulatory. Something very important, just to frame basically about carbon valuation, there are three fields. Regulatory markets with quotas, for example, in Europe, something called ETFs, so where companies have quotas to emit. It's the same kind of markets that are ruling the nationally determined contribution and Paris Agreement, but for countries. There are also some carbon taxes at the border, for example, that as the one that Europe announced, but and other countries have already implemented to value the carbon impact at the production level. We are not talking about this. We are only focusing today on voluntary carbon markets. For example, companies that have committed to net zero to reach carbon neutrality and which purchase carbon offsets or carbon insetting credits to compensate what they cannot reduce by themselves. So that's very important to know. Individuals and companies can purchase carbon credits on carbon markets, on voluntary carbon markets, and that's what we are talking about today. Please, Santosh.
Thanks, Rafael. So I think I'll just quickly summarize the carbon market play right now. I think Rafael gave some good oversight on that, but the carbon market entirely has two parts, and that's what we were hinting at. One is a compliance-driven, where the regulations require you to purchase or abide by certain kind of rules that put a price to carbon. And then there are independent carbon market players where corporates who have voluntarily committed for the carbon goals, they operate in the market to meet their carbon commitments by buying from these independent credit mechanisms. For this particular study, we are talking about mostly of the voluntary carbon market. However, there are now several new developments in this space where compliance carbon market and voluntary carbon market both are having some kind of interactions started. So Singapore government started the compliance credit and voluntary carbon market to have a limited play. So 5% of their compliance market could be interacted with the voluntary carbon credits. But on this, if you look at that, the first line, I think there's like typo, global carbon market. We're talking about 27 carbon trading mechanisms that are ETS driven by regulations. And then there are multiple voluntary carbon market projects. So going from, overall view to specific to the voluntary carbon market, this carbon market was valued at $2 billion, and the growth projections were very modest. People are not expecting this market to shoot up that rapidly. But by any kind of growth projection, the market has grown much beyond what we expected to. And there are several kind of projections that where the market is heading, and all those projections talk numbers which go beyond $50 to $100 billion in next 10 to 15 years. These numbers are estimates, but we are giving you a very conservative view. Just to give you a sense, the market was in 2021 only $2 billion. But if you look at that, the number grew up quite rapidly. And we are estimated to have in 2 to 3 years, something in the range of $20 billion. The estimates are coming that in 2 to 3 years, by 2025, we'll have $20 billion. So it's growing very fast. So the point here is that the voluntary carbon market is growing rapidly and it's expanding, and it could be a source of revenue for many activities. Now, coming to second point, many of these carbon credits come from different activities, and they can be classified as different type of credits coming from different sources. So one of the key things that we have seen in this market, that not all the carbon credits are priced equivalently or similarly. You can see a huge variation in the range of prices. A carbon credit coming from nature-based solutions, say agriculture, forestry, is priced more than a carbon credit coming from a wind energy project or say a renewable energy project. So we have to also understand that there are some nuances. These nuances are driven by primarily the co-benefits that these carbon credits have. So as Mr. Hara was mentioning, that biodiversity, the community benefits, etc., several mechanisms put additional kind of weightage on this, and they provide prices. The reason why we are talking about this, that it is estimated that there is a potential for nature-based solutions to contribute almost 7 gigaton of carbon sequestration every year. And that's a significant number for our net zero journey. There are certain questions people ask that, whether this is kind of shifting the focus away from the corporate on reduction of their own emission. Does this allow them to kind of pollute and buy carbon credits? I think just want to highlight that part, that in all the frameworks that are emerging right now, carbon credits are supposed to be part of residual offset. So first step is that you reduce to the extent possible, but you are not going to achieve net zero by just reduction. So you have to offset the residual part of that. Next slide. Yeah. So coming to Indian carbon market, which is the focus of this conversation. If you look at overall numbers, India, first surprisingly, when we started looking at it, India is the largest carbon offset project host. We have around more than 129 carbon offset projects in India. So the activity is already growing there. And a majority of that activity came from a number of CDM projects getting converted into VCM projects. So India has a huge repository of experience and the developers who were already working on CDM projects. And as the voluntary carbon market became more attractive, they shifted to that. But overall, we have a huge, stock of experience, expertise across different kind of projects in India. The second, if you see the number growth, we grew from 11 million tons of CO2 emission credits to 68. So we have almost gone 6 times of that in a very short span of time. And the key sectors that have come as a major attention is agriculture, forestry, and manufacturing to some extent, but majority of them, the new sectors are coming into agriculture and land use change or forestry we call. And some of the traditional instruments like Red Plus have seen good traction. Now, these are some of the things that we are summarizing as a trend, but as we speak, there is an increased amount of awareness about different stakeholders. They are talking about voluntary carbon market. So that's the one big line. The things have changed rapidly. Now, coming to the government focus on this, there are 2 major developments that happened that the larger audience should be aware of. One, India announced that they are going to set up a carbon market last year. And this year in the budget address, the Prime Minister announced that India is going to have a new carbon credit type called green credits, which is yet in development, but that would be relevant for discussion in future. So Government of India has decided to set up the carbon market. They got the agency identified, that Bureau of Energy Efficiency. Ministry of Power is the host body, and they are setting up the basic infrastructure, processes, and the rules and regulations for governing the carbon market. The development right now we are seeing is that they are looking more into going step by step. The first step is to focus on the compliance market and then go into the voluntary market. But these are the things they're already working on. Our commitments as part of NDC is also one of the key factors that will drive this thing, because Indian government has clearly said that carbon market is a way for them to meet their NDC goals and create a better kind of decarbonization pathways for the country. We have done many projections for the potential of the carbon market, but if you look at the potential, we are talking about $30 to $50 billion market by 2050 in India. And that estimate comes from taking a conservative price point of $15 to $30. These price points have already been surpassed. So right now, the carbon market already is seeing a price of $30 or more. So these numbers could be going high, but we are being very conservative. Yeah, over to you, next. So if you look at some of the kind of solutions that we have in India, and I'm going to briefly talk about that, I'll take more questions on the Q&A. There are several platforms that exist globally that allow agriculture sector carbon or climate outcomes to be traded. Some of the big ones is Indigo AG, which is probably the largest one that is working on the large landholders who are working on carbon project. Then Econ by Rabobank is another platform that is focusing on only the agroforestry thing, not focusing on the soil carbon and others. So there are several programs that have some kind of nuances. We have gone into detail. Then there are cryptocurrency based things, and Mr. Hara talked about the work they are doing with Kesapa at Suti. So they have this thing. We also have a number of Indian examples. Intellicap set up a specific platform to just work with small landhold farmers in agriculture and agroforestry with a couple of partners, and we are reaching out to 1 million farmers. We have already started the pilot. And then there are Nurture Farm, Grow Indigo, Bhumitra. They are working on soil carbon, crop residue burning, a number of other activities that come under the larger basket of agriculture sector play. So we are looking at much, kind of evolved carbon market that is taking shape in India. Over to you.
Yeah, thank you, Santosh. So maybe just an additional comment on this slide is that, so traditionally, there were really two main standards on carbon markets, which are Vera, VCS, and Gold Standard. They are trying to evolve because they are challenged by lots of new initiatives that try, in particular, to link farmers directly with the carbon markets. And of course, they have to evolve and be more agile because the process that was going on to launch a carbon program a few years ago was very long and very heavy. So that's the first thing. And the second thing, as mentioned by Santosh, there are some really very interesting mechanisms that are in place in these new initiatives, such as, for example, Econ that you mentioned, Santosh. And the principle, and it can be a source of inspiration, is that they pre-sell to corporates such as Microsoft or other companies at a quite high price, the credits, and they have a framework agreement, and then they have let's say, validated the technical itinerary for agroforestry, and based on some principles that are easily monitorable by GPS and geodata, then they can quite automatize this kind of thing. So it's a way to reflect, because in the different solutions, there are two levels. The first one is how to qualify and issue the carbon credits. And the second one is how to give back to the communities and what is the value that you take from the carbon credits to irrigate the rural communities. So let me get a bit more into the specific challenges, because all of this is quite complex. It's moving very fast as well. So we need to have a firm understanding on the challenges. So the first one is that there are some specific requirements among the main standards, but also globally, because there's a task force on voluntary carbon markets that try to give some rules to ensure their good issuance, to avoid any greenwashing risk or social washing risk, because there are lots of controversies on this carbon credits when they are not properly organized and issued. Of course, there are some agronomic challenges, because all we are talking about is based on science. It's based on the scientific approach on GHG emissions issue avoidance and on carbon sequestration. And all of this needs to be very firmly attached to a scientific analysis with criteria that are, without doubt, not something that can be put into question. The third one is social dynamics. Of course, if we think about developing carbon programs for smallholders, let's say each smallholder has a 1 or 2 hectare plot, then probably you would need 5 to 10,000 smallholders to make it really economically viable. Of course, if you think about a 5,000 smallholder program, it's 5,000 persons who are chiefs or managers of their own business unit, a small farm, and you need to get them enough benefits that are much higher than carbon market can bring. You need to think about a scheme which brings them much more benefits than only the value of the carbon. So to ensure that the social dynamic is going on, you need to think about this. Of course, implementation is also a challenge because it's costly to monitor, to organize all these schemes. But also, there are some legal constraints on which we must be very careful. And third one is, of course, a question of funding, and especially the question of upfront investment, how to finance the initial steps of feasibility studies and of qualification of initial qualification of the carbon standard, of a carbon market regarding a carbon standard. So if you get a bit more into the challenges, I will not describe all of them because it's in the report, but just rest on a few ones. A very important one is how you define the baseline and the criteria to monitor the impact of the change of practices or of the reforestation on the carbon estimation. So the way it works is that you have to define a baseline, which is a scenario of what would happen if the carbon program was not put in place. And then you compare what happens to this baseline that you have set up at the very beginning of the project. So the way you define the baseline is, of course, totally key to ensure that the valuation of the number of credits that you will be able to issue in the 20 years or 30 years of the carbon program is calculated properly. Another one, and I will get back to it in the recommendations, is the question of the legal and regulatory frameworks. And maybe a third one is how to best identify innovative solutions in terms of digital approach, because it's not only organizational, and we believe that digital will be a key part of what could be a link between Indian smallholders and voluntary carbon markets, and of course, financial structuring. One last point is that since it is the market, it is by nature uncertain. But what we have seen with Santosh is that the demand for voluntary carbon markets will rise. And if ever it's not the case, it will be probably because regulatory markets will take over the development of the voluntary carbon markets. And that's why in everything we will develop, or everything that will be developed, it's very important to think about how to reuse tomorrow, if ever the voluntary carbon markets fall because everything becomes regulatory, how to reuse what is developed in a regulatory context. So let's get maybe to our recommendations. So we have developed quite a number of recommendations and possible solutions that could link the smallholders with the carbon markets, the voluntary carbon markets. What we have designed is, of course, applicable to India, and Intellicap is very much aware of everything that is going on in India and all the challenges, constraints, opportunities that are linked. But just to mention that what we have designed could be applicable to other countries as well. So 5 solutions, and I will particularly focus on 2. The first one is a clarification of the VCM framework, regulatory framework. If ever we think of a project developer, there are some uncertainties that are a hindrance to development of carbon programs. The first one is the risk of competition with NDC contribution. So nationally determined contribution. If ever, like it happens in Indonesia, has happened in 2022, there's a strong uncertainty on if the government will accept or not that some private carbon programs happen. Of course, it's a major risk that will stop any development of new project. So the question of clarification on the risk of double counting is very important. The second one is the land tenure. Basically, in carbon functioning, either you have a proper land title that can give you the right as a farmer to give a mandate to a structure organizing the program to get the credits on your behalf, or you don't. And if you don't, then you need a recognition by local authorities of your customary rights. So that's the second point. And the third one is, of course, the possible validation of rules or clarification of rules of what is acceptable or not on a voluntary carbon market. I will get a bit more into detail after that. A second one that you see on the left is to develop own government-backed smallholder inclusive programs. Just to give you an example, in Sri Lanka, the Rubber Research Institute, in a program that is funded by IFAD, has developed on 3,000 hectares a concessional scheme giving access to land to smallholders, and which issues carbon credits that are belonging to this public institution, which is managed by the Ministry of Plantation. Another option could be to establish a framework agreement with a standard. I mentioned the example of Acorn. That's what they have done with a standard called In Vivo, which is a bit less developed than Vera or Gold Standard, but which is quite robust. A fourth solution would be to design an Indian VCM platform. When we say VCM platform, it would be a platform, technical and digital platform, on which credits could be traded under a certain number of rules that would be defined by the Indian government with the assistance of a DB. And this last one that you see on the right is how to think and to design innovative financial mechanisms that unleash, in fact, the potential of development of voluntary carbon markets in India, but channels them for the benefit of the smallholders and the rural population. All of these solutions can work quite independently, but they also can be combined and work together. And we believe that probably some of them should be combined. I will be very brief on that because we don't have much time to respect the 30 minutes that we were asked for. We really have to think about these solutions as farmer-centric and inclusive, and think about the fair and equitable benefit sharing, but also the value that can be brought in addition with this means through extension services, through access to, for example, microinsurance or large schemes that could be negotiated on behalf of a lot of Indian farmers within that scheme. Of course, the quality of the carbon market is very important. The capacity to be transparent, to avoid any double issuance or double counting is totally key to get interest from the corporates, for example, to purchase the credits. And of course, something very important is that everything that will be done has to be science-based and totally unattackable from a greenwashing or a scientific point of view. So I mentioned the voluntary carbon market regulatory framework that we would see could be very powerful to clarifying the legal and operational uncertainties could be very powerful to develop these carbon markets. But we believe that in exchange for these clarifications, such as recognition of land title, guarantee of no double counting or no competition with NDCs, we should think about trade-off with the carbon project developers, with a commitment not only to comply to applicable rules, but also commitment to retrocede part of the value to the farmer communities through direct payment, through community investment, or through extension services, for example. Another one, something we wanted to mention is the financial facility could be imagined in which upfront investment could be facilitated through two means. The first one would be to fund financial and scientific studies to design technical itineraries, which would be commodity and crop specific and also region specific, because of course all of this is based on the nature of land, nature of soil. It's based on a type of commodity, reforestation, change of practices on rice, change of practices on intercropping in coconut plantations, whatever. Of course, all of this needs specific technical itineraries because you cannot apply the same methods everywhere. The same principles, yes, but not the same methods to all farms. If ever there was some technical itineraries that would be, whose studies would be funded by the Indian government or other type of funding, which would be pre-approved, that would very much facilitate the development of many projects for the benefit of the rural populations. And the second thing is, of course, to organize through a partnership, for example, with NABARD, and sometimes we'll get into it, pre-funding of upfront investment. That's the way they have done, for example, in Scotland for renewable energy. They have a national fund pre-financing the feasibility studies for the local communities or the local authorities, and that's enabled to unleash the potential of renewable energy in Scotland. That could be the kind of thing we could look into. Just a last idea before getting back to Santosh. We believe that it's quite complex what has to be designed to be perfectly fit for the benefit of the smallholders and efficient. It's a mix of carbon engineering, digital solutions, financial structuring, social dynamics, legal and regulatory matters, and of course, agronomy and science. We have interviewed lots of type of stakeholders, carbon standards, carbon engineering companies, NGOs, etc., to perform that study. When we mentioned that idea to all of them, they were really enthusiastic about the idea of participating in a co-development process to best calibrate the assemblance of the different recommendations and what could be and should be designed to enable to really lever on these BCMs for the benefit of the rural populations. Please, Santosh.
Yeah, thank you. I think knowing all the challenges and the questions I'm getting on the chat, it would be good to kind of highlight what kind of support and what kind of interventions are needed to make this market work. And we looked at some of these things. So we classified our technical assistance need of the sector in two buckets. One is that there are several ecosystem challenges, which I say challenges which are applicable to the emerging market, which are policy level, a number of other things. And then challenges specific to the private players like developers, financial institutions, and the players who are working in that. So let me start with the challenges that we see in the ecosystem. And as you might have heard, and there are questions around that, there is a confusion about the carbon market taxonomy. What is voluntary carbon credit? What is green credit? What is a compliance credit, etc. And there was an incident when a couple of news from India were kind of not giving clarity whether this was being talked about for the compliance credit or the green credit or the carbon credit. So a lot of work is going on to make clarity about what is the taxonomy of carbon credit, what you call carbon credit, what carbon credits are meant for the compliance market, what for the voluntary market, and what are they supposed to be contributing to NDC. So a lot of work is going on. Indian government is working on that. But this taxonomy has to be established to bring more clarity. I was having a question in the chat box about the MRB. MRB is one of the critical factors in that. It addresses a number of questions around integrity, double counting, etc. And as we have been seeing, the MRB processes are kind of evolving. There are a lot of digital methodologies getting into action, which can measure more accurately and report data automatically. But this, again, a lot of understanding about these technologies, how they can be implemented and how the data can be used is very nascent in the market. The third one is that while there are trades happening, but the trades are more happening from the individual connects and approaches. There is no one place where you can go and find the kind of project that are there. There are some examples where if you say Vera might be able to talk about the project registered under Vera, but if you want to go and find out project registered under Econ, Vera, or Gold Standard, you have to go to 3 locations and find out and search. So there is no place where we can see different sectoral, different procedural carbons are there. The other big challenge we see in the emerging market is the challenge of demand management. Whether the demand would go up, will go down, how it affects the prices. And since there are a number of initiatives taken by the government and the global players affects these things. So you have to understand that how we are going to talk about giving a good demand signal to the operators. Without a good demand signal, the project developers or the financiers are not very keen to take a bet on this. So we need to understand how we can manage demand. There are certain approaches which have been already talked about. Indian government is talking about Indian corporates to voluntarily commit to the carbon goals and buy carbon as per the voluntary commitment from the market. So that could be one way of doing that. The net zero commitments are the another way of looking at that. Or compliance market accepting voluntary carbon credit could be another way of doing that. So we are looking at all the possible scenarios. And the last one, there is a big gap in the ecosystem of carbon credit is the pre-financing of the carbon credit. If you have carbon credits, there are people willing to buy, but carbon credit activities are not able to get the finance that is needed to start the activity. So pre-financing of the carbon credit is one of the key needs. So how to address that? Now, having said that, if we address these barriers, these might not be addressed in one day, but they are the area that we can focus on. The second set of technical assistance need that we have identified is related to the project developers, entrepreneurs, and financiers. So one is that there are many entrepreneurs who are willing to take these activities, but they lack the technical know-how, they lack the understanding of different procedures and certain kind of technicality that is part of the carbon project. So how to build their capability. Second, if you look at the need for the sector, there is not a very structured way of developing the pipeline of the project. So while the investors are saying, but we don't see a good pipeline coming or the pipeline is not visible. And third is that enabling a financing facility. While we know the mechanism for financing, what can be done, but we don't have a dedicated facility that can work on this. There is one major challenge here is that many of the financial institutions who want to leverage carbon credit for financing, they don't know how to treat carbon as an asset class into their own portfolio. That's a big challenge if you talk to any financier, that once they take the carbon credit as a leverage or collateral, they don't know how to treat that carbon credit as an asset class and how to say that what is the price of that in their portfolio to say what they can leverage. So these are the challenges these the developers, financial institutions are facing. We propose a TA program for leveraging the carbon market that could have two broad arms. One, focusing on the first part, building the ecosystem where you work on the government, work with the addressing some of the ecosystem challenges. And the second one that is dedicated to the financial institutions such as NABARD, where NABARD could get the capacity to understand the economics of carbon project, understand the risk, understand the appraisal systems of that, and understand how they can value the carbon credit for pre-financing or for financing or for any other kind of needs. So I think this is the broad overview of TA program that we are talking about. We are happy to go into details, and it's there in the report. Rafael, over to you.
Yes, thank you, Santosh. Maybe just a brief comment on what you just mentioned, considering the second TA facility. What I wanted to stress is that in terms of bank risk or financing risk, the change of practices that create the carbon impact and that are valuable through carbon offsets. If you think about existing farms, for example, the money plantation of rubber turning into an intercropping system which creates carbon sequestration in biomass and in soil, same with other kind of examples. It will not only create a carbon credit value, but it will also increase the value of the land of the plantation, because more carbon and more intercropping means also a better revenue, an improved resilience, and all of this must be taken into account in the way the TA would be designed. Yes, that's what I want to add. As a conclusion, I think very briefly and very clearly, our partnership with IntelliCap and XAPA would be very happy to continue accompany you in these reflections if ever the TA were a track that you would follow. As Mio mentioned, it would be probably the case at the beginning of this meeting. But maybe what we can do is, as there was some questions in the chat, except if you have a question that you want to directly ask.
Yeah, thank you, Rafael. So yeah, Rafael, Santosh, very much thank you. And now we move to the question and answers. I think as we have some questions coming in and being answered, first of all, I would like to request participants from NABARD to make some comments if you are still there. And also, while waiting for that, can I ask everybody to turn on your cameras if you can? So our colleague Sandy is going to take a screenshot. So maybe keep smiling for 3 minutes. And so I think Chief General Manager, Mr. Murthy, you are there. Good, I can see you now. So can you come in and give some remarks or comments if you can? Thank you very much.
What? Yeah, thanks a lot.
Sorry, Mr. Murthy. Sorry, before that, Rafael, can you remove the screen sharing so we can take the picture? Sorry. Sorry, Mr. Murthy, please go ahead.
Yeah. Shall we go ahead? Yes. Yes. Yeah.
Yes,
thanks a lot. Yeah. It's a very good study, and it gave us a lot of insights. There are certain points which has really, is a very good points learning for us. One is NBS, nature-based solutions, and it's fetches maximum price. There's a huge plus point for us. Second one is the prices are now, market is growing up. Earlier we had an experience of CDM, then the way for it was lost, again it was regained. Now prices are improving it. Third point is this, now Government of India is coming up to create a platform. There are the very positive features, and you also mentioned the challenges. Incidentally, the challenges which you have narrated during the last 6 months, we have also faced this kind of a challenges. Still, the way forward is not very crystal clear. Today's presentation also has given us a lot of insights how to take it forward. For us, it is a natural corollary that having invested close to $20 million USD per annum in nature-based solutions, or more precisely so, on watersheds and the tribal development programs, how voluntary carbon markets, how this mechanism has to be overlaid in our programs. The point which you have mentioned is you should have a strong baseline. So how these the feature characteristics, requirements, compliances, etc., how these are all ingrained, brought into our regular framework of our nature-based programs. This is the one is most important. Second one thing is you have already said that some kind of a piloting is required, taking up the few projects of say watershed and the tribal development program, gets the estimates how it can be done. I think that's required. Third part, you have said that about the TA part. TA part is a fulcrum, it's essential to drive this program because it's not a 6 month or 1 year program. Lots of capacities have to be built in at DFS like us, target to our partners, and a lot of it should be an ongoing process. So we appreciate, we welcome the study findings, and I hope certainly we will have a discussions to how to take it forward. Thank you very much for again really be for this giving us an opportunity to attend this program. Thank you.
Thank you, Mr. Murthy. And before waiting for Santosh or others' response, maybe let me invite Srinivasan to make some comments. Srinivasan, go ahead.
Thank you, Masa. I think it's a comprehensive scoping study, which is taking stock of what's happening across the world and the local Indian context. The comments I have are one, the first is to look at the carbon market as something that will be functional for offsetting the local issues with, say, local demand with local supply, not to look at an international market where carbon credit generated here will be sold and all that. Because looking to the commitment that have been made for 2030 under both COP26 and 27, I don't see an exceedingly large amount of credits being available for sale in the international market. So if the effort that we look at, we take international best practice and try and factor those for developing local market. This is one. Second, looking at the focus of what we are discussing today, the smallholder farmers' participation in this market and benefiting therefrom. I would think whether it is a voluntary carbon market or a compliance-based market is irrelevant. When I do something that sequesters carbon, that generates credit, I have done my job. Let us separate this part where we train farmers on doing the right things in order to sequester carbon, and then the aggregator and the higher level structures do the job. So the way we go about training farmers is not to confuse them with saying there is something voluntary, there is something compulsory. What you do? I produce wheat, whether the government procures wheat or a private sector individual procures wheat or a roller flour mill takes it for making flour, it is irrelevant to me. That is the simple level at which we should deal with this. I understand from an institutional, from a policy and from a supply side, we require all this understanding because they all go and report in different buckets. As far as the farmer, it should be dumbed down to a level where he knows if I do A, B and C, there will be an increasing what you call carbon content in my soil. It will be measured and the increments will qualify for credit, and I have to ensure for 10 years I have to keep it protected. The third part, there are significant costs involved in measurement initially, establishing the credit and then continuing monitoring for 10 years. Who is going to bear this cost? If farmer is going to bear this cost, what actually is the payback? Will the incremental value of what we call as carbon credit, because in the chat box there are questions and very clearly it says, look, we cannot establish a price that will remain stable, right? And even to generate 1 unit of the carbon credit, so to say, in some cases it's going to take 4, 5, 6, 8 years. If it's afforestation, commercial, agro, whatever forestry, they're going to be. If it's purely agricultural practices, which will improve soil carbon, there might be a walkway of 3 years. So who will put in money during the gestation period? So when it comes to financing structures, let us separate financing of projects, the pre-carbon credit, from what it takes to make the farmer become ready to wait through the 3, 5, 7 year gestation period, and then he does the right things, incurs additional costs. What is the kind of financing mechanism we look at here? Maybe blended financing, maybe grants. Significantly, in all the projects that we will take up for investment analysis, there is going to be a huge gap between financial rate of return and economic rate of return. Whether the value of carbon credits, which we think will be reasonable enough to bridge this gap and produce real cash in the hands of farmers to enable them to take this extra effort. I would think these are some of the fundamental issues when we approach from the farmer's point of view. And I would like, since NABARD is also involved, ADB is involved, we have a very significant focus on looking at, as a farmer, how I will get involved, how I will take the extra effort. And I do not want to be only patted in the back for saying you have done the right thing, you have sequestered carbon. You say, then what is it in it for me for having done the job? Whether it is going to be certifying agencies, the aggregators, the financing agencies who will take all the money saying there are carbon credits everywhere. Some of the earlier work done in this field, it has resulted in this kind of a syndrome. The certification has cost more than the eventual money that came up from certificate. What do you call the credits gain? So we have to ensure, and this is going to be a scale issue. This is not going to be small pilots. We are not in a situation where we can start with 10, 25 villages, 5,000 farmers and all that. It has to be done in scale to ensure that the cost of our doing things remain fairly low. The cost of delivery of technical inputs is really reasonable. Yeah, I'll stop here. There are more questions. Maybe at a later date we can pursue them.
Thank you very much. The time is running short, but also there is another question not answered from another Srinivasan from ADB's Srinivasan. Is there a policy thinking on setting floor price and or ceiling price for credit from the agriculture, forestry, land use sector? So including those, maybe Rafael and Santosh, can you respond to the comments and questions? Thank you.
Yes, we can try to be. I think we don't have much time, but maybe I will try to very briefly answer to 2 or 3 questions and let Santosh complement. So yes, of course, it has to be farmer-centric. When we say farmer-centric, the rules has to be clear and they don't have to. I mean, capacity building is key, but the value to the farmers must not only be related to a compliance to new rules or new ways of doing things. It must be programs that brings them value, which go beyond the carbon valuation. If you think about if extension services can be brought to perform some intercropping, which increase the revenues and generate some carbon sequestration. Carbon sequestration is one thing, but the increase of revenues related to intercropping must be much superior to as a benefit for the farmers that only the carbon credits. That's, I guess, the best way to ensure that a large number of farmers can be embarked in change of practices. Considering the question of the floor of the price, one of the best way to deal with that is to think about offtake by corporates, can be Indian or international corporates, for example. And considering the question of the local, the question of local vs international trade, of course, you could imagine that if ever the voluntary carbon markets or the smallholder inclusive carbon markets were authorized to abide by quota rules for Indian corporates, that could be a way to finance and pre-fund the upfront investment which is needed, and of course, which cannot be borne by the farmers. It has to be through the project developers and through financing mechanisms that will, of course, be linked with blended finance or other grant mechanisms. I let you, Santosh, maybe complement on some other of the questions.
Quick remark, I think, Srinivasanji, the first principle is that the farmer need to benefit from the carbon and they don't need to get in technicalities. And that's the principle. We are doing a project with 1 million farmer where we have addressed all the challenges. So they get a surety of the price that they're getting. and the risk of the carbon, etc., is taken by the investors who would also benefit from the rewards if the prices go up. So that's the first part, that a lot of experimentation are happening. The floor prices are also being kind of set up by different instrument by saying that I will guarantee you this price, and we get the contract from our offset buyers established so that the floor price is addressed. That's the basic price that they can see. So what we are saying, that a minimum price is guaranteed, but you also participate into the upswing of the price. So all these are kind of there. The second part, I think there was question about voluntary carbon market and the government position on that. I've been working with Ministry of Environment, Forest and Climate Change. There are two mechanisms, sir. One is the 6.2 and 6.4. 6.4 is the market one, 6.2 is the bilateral. Indian government is committed to international experiment and market, because we see that this could be a way to get more money. However, they're very clear that which sectors carbon credit would participate and whether it would have implication on our own NDC targets. So we're working on that. That's the thing. Last point, as you highlighted, that there are several challenges that we encountered into the previous carbon market, and those were very well studied. So the new breed of carbon market, I happen to be one of those guys who worked in the earlier carbon market, and I was part of the those sad stories. So we are looking at all the learnings to define the new setup. In fact, in India, what has happened, that considering the fragmented land holdings and the kind of activity we do, nobody knows better than NABARD. We are trying to see that if we have to address that, we have to take the context, contextual best practice of global and color it in the Indian context. Because even the land holding records, the other commonalities are not there. I'll give you just one flavor how the space is changing. As we speak, there are a lot of projects being done in the rice cultivation for alternative wetting and drying to remove the methane emission, and that was doing. There were so many complaints about the procedural delays and challenges, where I officially put a hold on that methodology and saying that we are going to rewrite and revisit. So the point we are saying that several of these challenges are being taken up and being addressed. So we remain optimistic to that. Last point, we as a part of Aviskar Group, as you mentioned, blended finance, there are several risk investors, impact investors. We set up a $300 million fund to pay upfront to the farmers and benefit from the carbon credit prices if they go up. So we take the risk and farmers are there. So I think what we are summarizing here is that lots of learning are now being synthesized and addressing the concerns, but we are yet not perfect. So we have to be open that there would be challenges, there would be mistakes, and we should be learning from that. I think that's the only consolation that we have, that we are in the right direction.
Thank you, Rafael and Santosh. So I think there are some more comments, but we have to close the meeting. As the title says, this is a scoping study, and we already started some TA activities with NABARD around the carbon and climate change. So we keep working on this field, and I think this is a very important field. So we keep this kind of engagement throughout the period. And let us conclude by inviting Michiko Katagami, Principal Natural Resources and Agriculture Specialist, for the closing remarks. By the way, thank you, Michiko, for organizing this, and floor is yours. Thank you.
Thank you so much. This is a very hard task just not to crack within 1 hour. There's so many things to cover. In fact, there's so many more discussion has to be made to clarify your points, each one of you. But I really enjoyed the discussion. But so I just wanted to put, so that we would have to continue, and we like to propose this a little follow-on discussion, maybe centering about what can we do next. Look, it's going to be really bumpy, right? A lot of things going to happen, and there's so many players changing. Rulemaking is changing, and we are working with the scientists, investors, the smallholders groups. One thing that we really didn't touch upon is the pricing of that. When you think about price, you have to think of the price that farmers will get. We are looking at all these examples, actually how much they're getting out of whatever, 10 or 20. US, it's straightforward. If you do 1, 2, 3, 4, 5, this kind of soil carbon activities, you get $20 per hectare. It's not like that in India. For example, there's the transaction between this private to private, domestic carbon market sort of transaction. Farmers barely get $1 per ton. And what is that? would that pay for their efforts, and is it making any profit proposition or not? We would have to pick up a little bit more like this is the all good discussion. We have to put it into a little bit more like picking up the examples and examine exactly how it's working, and then learning by just the example, leading by example. That's something that we like to push it forward. Otherwise, we have to wait for years to come until sort out all these things so that we can actually invest into that. I think this is the nature of the game, and we would have to just stick close to this. The last comment that I wanted to make is this: the farmers need an incentive to change their behavior, and as I think Mr. Srinivasan mentioned very rightly, people first day they will ask you, okay, so by doing that, how much do I earn? Do I earn more than I do now? I mean, if you can't answer straightly, not just about the carbon market prices, this expenditures or whatever, therefore you make whatever, you have to have a clear answer right from. So I think we would have to help NABARD and all the other stakeholders to get to that point. And I think we can do that because we're working with the other countries. China is doing really clever things. So is Vietnam. So many things, the interesting things happen in Colombia. We are really networking together. So I mean, next step, I would like to propose a continuation of this discussion, maybe with bringing a little bit more, comparison of the example, learning from examples, and shape what we can do next. But anyway, thank you very much for your hard work. I think you were very, very good, sort of like a work job done within 1 hour discussion. And I thank you for the audience. Also, there's a lot of interesting questions are coming out. I think we are on the same boat or same page. So let us discuss further for the series to come. And then lastly, thank you very much for my staff that I think you're doing a great job for this event preparation within a few days time. Thank you. Thank you so much. So back to you, Masasane. Happy weekend.
Yeah, thank you. Thank you, everyone. And I'd like to extend my thanks to other region colleagues and also, of course, NABARD and other colleagues. Thank you very much and happy weekend.
Thank you.
Thank
Thank
you. Looking forward to continuing this discussion. Goodbye.
Bye.